All right, everyone, welcome back. Like always, we wait for Asia to finish before we take any type of trade. So as you can see, we have equal lows. We have a unswept Asia low and also a unswept Asia high as it's about to close and Frankfurt's about to open. We take out this failure swing. It's a failure swing because it failed to take out that low. It's also considered a false BOS because people are going to look for a long here to the upside, but it's simply a false structure break. So that would be simply an inducement. We have a high here, so that's equal highs. All of this is liquidity feeding into a unmitigated wick. What currently price is at. So if price takes out all of this liquidity, in other words, stop losses, sell stops, it's going to come into this imbalance for price action and rejection block pretty much, which is also a strong low. As you can see, it took out that low. Can't wait to mitigate this breaker. I'm just gonna get a wick right there. All right. So I'm anticipating Frankfurt to give us a push to the downside. We already took out buy side liquidity. So we already took out buy stops. This is what's left. We got sell side liquidity. We got sell stops resting just there. So that's the high. Structure retraced. Came back up. Again. Trace. Fail to break this low right here. Fail to swing. And we have equal highs right there. Take out the liquidity, came in test into that untested, unmitigated wick. You can see on the 1 hour. You see the liquidity is quite obvious, just resting below this unmitigated wick right there. That's how it looks. It's a strong high. Work structure retrace, work structure once again, anticipating this to be taken, all of this to be taken. So this would be a T1 type 1 formation that we're looking at. All right. One of the hardest things is seeing structure and a T1 and T2 formation because you have all of this minor structure inside, and that can be very confusing and and you can easily get lost. So you have to be able to see it in that way. So understand a unmitigated POI, understand a strong high, which is inside the unmitigated POI, understand where's the liquidity at. All right. If we already took out buy stops, the most logical thing is to take out sell stops. If we already take out sell stops, the most logical thing is to take out buy stops, right? Which is on every major high and low. So you gotta be able to train the eyes to see it this way. Okay. That's why we have T1, T2. So if price broke structure, retrade broke structure once again, then before any of this happened here, we already have this full understanding. And we also know there's a failure swing. So that gives us more confluence to know that this right here is a liquidity pool. And you're going to take that out. Okay. Don't let the small structure inside confuse you. Train your eyes to see it in this format, which is very hard. I understand that because you need experience, right? So, but know that we don't see it as a simple high, 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 low. Okay. Inside of every leg, there's a trap. So we need to understand the trap. That's the whole point of T1 and T2 is to understand where is the trap. And once we identify the trap, everything else becomes simple. All right. So if we understood that this is a trap, okay, and then price came and took out this, came into an untested low right here because we have that breaker structure. Then we also have a T1 formation here. right? If we understand that's the trap, and if this creates the opposite QM, then we know that's weak. That creates equal highs. We take a long from here, and then we target this, the internal range of the entire big range, which is this. Okay, so then we target the internal liquidity if we're counter trending. Then we exit and go for a short here. Then we target this because we understood where the trap was set. All right. It is easy for me to explain it because I've been doing this for a very long time, but I hope you see it. All right. We had internal range and the external range. There's a range within a range, but you gotta be able to train your eyes to see structure. That's why I say see structure in QM formations, range, T1 and T2. If you train your eyes to see it that way, you will be able to identify the trap beforehand. And that's what we want, is to identify it before the market gets to a certain level. Okay. Just going back to this. So Frankfurt's going to open. Let's go down to the 5 and 1 minute, the most logical time frames to use, as we are on a 15-minute, or in other words, a very small POI. That's why we switch time frames, to get a clear view of the ranges. It's not because we do it just for fun or for a perfect entry. We do it because we need to understand what's going on. If I'm on the 15-minute, I can't see much. There's not enough data. I need to see what's going on here. So breaking it down in time frames, I can see what's going on. What range is currently being formed? So now I don't know if this is gonna play out, but I'm gonna give you guys a good example here as I see a textbook setup. All right. We have a structure break, a retracement, a break again. If this is already a trap, and we understand that price is gonna come back and take this out. Now, of course, doesn't always do that. That's why we have to see our price being delivered. Okay. But most of the time it will. The other 10%, it won't. It just happens, okay? Because net is 100%. But most of the time it will. And what you want is a strategy, all right, that is at least 80% accurate or happens at least 80% of the time. That's more than enough. You can easily make a living off of that. Okay. So if that's a trap, then that means that I'll be able to take longs from here until then, and then short. Okay. And it's because I understand where I'm at the range and where's the trap. So if that's the trap, okay, then I could take some longs. Came to liquidity, came into a point of interest. All right, and notice when price came into this POI here, all right, I have to see how price is being delivered. Okay, so we took a liquidity, yes, but now is it gonna go? That's the question. All right, is it going to go? Or will this be a fair swing, get taken? Because now I gave price a reason to go lower, and then we go. We gotta keep that in mind, be aware. So we go to the 15-minute, we have a unmitigated wick. Always use a higher time frame POIs. It hasn't touched it yet, so there's a high chance this is gonna be an inducement. Yep. So now, because I know my trap, And this is a 1.2 pip stop loss. All right. I don't use anything less than 2 pips. Okay, that's just me. So, I mean, this is 2 pips is pretty big here. I mean, I just gotta stick to my rules, to be honest. 2 it is. And that's a 1 to 3. Again, I don't like anything that is less than 1 to 5. That's me personally. But if you want to go for a 1 to 5 or a 1 pip stop loss, you'll get a nice 1 to 5 here. All right. But for the example, back testing for a stop loss, at least at a 1.5 pip SL, just a little bit below this, because depending on your broker, slippage and whatnot, right? So we're gonna target this. See what happens. Plays out. And I'm also have my POI above this. Check the 15. We have a wick. So the open is really mitigated. So short just above that. Which lines up with a order block, but that's the 50% of the block. So we're good. All right. Okay, notice this is what I mean by see how price is being delivered. Look, price came down. You wouldn't long this instantly if it just dropped. Okay, it needs to create a trap. Came down just before it tapped into the POI. Notice it made a retracement. Then it tapped. It gave price a reason to go there. Okay, it gave price a reason to go there. Now I tap. Pause again. Let's go back. All right. Now, of course, I just chose this area here just because, all right, just for the example of this one. But what I want you to get out of this is this. Price came in, took that low out. It gave price a reason to take that low out. Price came in here. Again, fair swing. Gave price a reason to go there. Okay. It can't just come in straight. And if it did come in straight, I wouldn't take it. There's a high chance this is going to fail and get taken. High chance. I've seen it happen so many times. All right. For example, like this one. Shell came in straight. It's a high chance this is going to get taken. So and then now we have a break. So now we can expect some retracement and then to the upside after that break right there. Okay. But notice how price is being delivered. That's what I mean by that. Look at that. Look at that. Remember, like I said in the beginning, you want something that repeats at least 80% of the time. Don't be so focused on trying to be 100% correct. You have a system or whatever you want to call it. You have a strategy, system, pattern, whatever that you want to call it, that works, repeats 80% at a time, at least 80%. This can go into a 90% area, but I don't want to say 100% or 9% because then that can be misleading to people. But it's a system, strategy, it's a pattern that works at least 80% of the time. I mean, I'm not making this up. It's in front of your eyes. Literally, it's in front of your eyes. T1, T2 are very powerful, but it's going to be up to you to see structure in this way. So you have to unlearn and relearn everything. And it's going to take time. It doesn't matter how many questions you ask or who you ask. It's going to take time. It's going to be up to you to put the work in, do the back testing, do the forward testing, do a demo, and all that. And that would take time, okay? And the reason I talk so, again, so passionately about this because it just works. It just works, okay? And now we're coming into this. Now, of course, I'm not always right and I don't win all the time, all right? Because again, right, if I can be 100% correct, or if anyone can be 100% correct, they would be multi-millionaires and billionaires and whatnot, right? Forex, at the end of the day, it is a game of probabilities, okay? Or a business of probabilities, however you want to see it as. Okay. So yeah, that's the pattern. Remember that we put this, right? Put this line before this happened. So now we're going to target this external range liquidity right there. We're tapped in. Fix this. Okay, now look. Now this is the second time frame, maybe. Look at this. T1 or T2. Broke structure, retrace, fetish swing, T2. All right, you got to trust yourself. Take the trade. What do you see? Take it. But this time, you guys should already know that everything I teach and say, it just works. All right, like it just works. It's proven so many times. But again, I still like to just say that it works, and I get excited about it sometimes because it's just amazing that we figured out two patterns that the algorithm repeats. It's just mind blowing. But anyways, let's continue going. All right. So yeah, that would be another short in the second time frame. Why not? 1 to 5. There it is. Target hit. Okay. Awesome. Awesome. Now, yes, we could have got a reaction from here, but again, higher time frame is king. Higher time frame order flow. Follow it. Don't be surprised if it just drops like nothing. If it just literally smashes through. We already take out the liquidity on the upside. Now we're coming to get now the liquidity on the downside. Okay. Obstacles are just something to be aware of. All right. And you want most likely to wait for confirmation and not take it directly, as that is low probable if it's taken on an obstacle. Very low probable. All right. Just keep in mind the bigger picture. Okay. So let's see what's going on in the higher time frames. Don't want to get too lost in lower time frames. Okay, so we took our liquidity. Of course, we tap into a breaker, which is a imbalance fill price action on the 15-minute, which is a breaker on the 5 and 1 minute. So that's what currently price came into. So we can anticipate some reaction. In other words, a pullback. So these obstacles are the reason these retracements happen. And if you can understand that too, you'll be able to just ping pong up and down, right? But again, not every trade is worth taking. Okay. Because when you start making a living off of this, the main key here is not going to be the strategy itself. It's going to be psychology, your mental health, and proper risk management. Once you pay taxes on this, once you buy groceries with this, once you get your car, your house, your apartment, whatever, you would treat this very, very careful. Okay, you will be very careful how much you risk. You won't be going crazy ping ponging. Trust me, you won't. Once you start making a living off of this, because you're living off of this now, you depend off of this. So your psychology has to be good. Your mental health has to be good. Okay, the market feeds off of your emotion. It feeds off of you. Okay, you're pretty much selling your soul to the market at the end of the day, to be honest. All right. So we could expect now a retracement. There's a breaker right here. So we can expect some retracement to that. Now let's anticipate what can happen before it happens. All right, we anticipate retracement, entry there. We can exit here. Okay, that's done. Okay, now what's the bigger picture? Strong high, BOS, T1 formation, probably. Take it out, POI, and then drop. All right, so you see how before any of this happens, we first fulfilled the first move. We have the breaker structure. So now we have a new range. It's gonna pull back into this, drop, fulfill this range, check. Strong high, BOS, bigger range. Now what is this? Now we're creating the bigger range. In other words, it's like minor inducement, median inducement, and major inducements. All right, the lower time frame or like minor inducement, the 15 intraday time frames are like median inducement, and then the higher time frames are like major inducements. All right, it'll create inducement after inducement. So, all right, so something like this we could expect. You know, this looks very textbook, but we'll see what happens. EU gives some good setups. Okay, that was very fast. No chance on going to a lower time frame. Okay, so yeah, tapped in like I expected, and I do believe we have a strong high, feather swing target. Look at that. What is that? T2. Come on, guys. T2 right there. Not making it up. It's real. It exists. I know. It's mind blowing. So price came into the breaker, which was the imbalance fill, okay, reaction, but we're still in this POI. Remember, this is still a valid, all of this is a POI. This is still a valid POI because a strong low has been taken. So all of this is still a POI. If you go to the higher time frame, 15-minute, you see that still point of interest. 1 hour, you can see that's a bigger POI. So all of this is a point of interest, which is also a breaker right there, bigger breaker and whatnot, right? But we always choose the closest POI to the inducement or to liquidity, in other words, which was this one. So we got the reaction, but we're done with this. So the zoom out timeframes, just understand what's going on now. Multi-time frame analysis, switching timeframes is a skill set of itself. Because not only do you have to understand what's going on in one time frame, but you have to understand what's going on the other time frame. So yeah, all right. So we have an order block here. All of this is a POI. All right, I'm not even gonna bother. I'm taking anything from here directly because all of this is a point of interest. The volumes in the body, we already had a reaction from the imbalance. Fill on the lower time frame, so we're currently in here. So now look, without even going to the lower time frame, what can you see here? All right, so let's break this down, okay? Let me use this tool right here. All right, look, we have a up, down, up. Okay, so this seems to be more so a pressure structure, meta retracement, feather swing type formation, right? Something like that. Okay, that's what we're going to a low time frame. But what do we see down here? We have a high, a low, and a break. So if that's the trap of this range, then price is going to take that out and then continue going up because there are sell stops here. So that wick on the 1 hour is only a wick on the 1 hour, but on the lower time frame is a structure point low. So this can get taken. Now, of course, it's not going to always take the internal liquidity, but if it does, then they fulfill the overall move. So we're going to take that out. The closest thing to this is literally a mitigated wick just below. Yeah. So take that out. I mean, we're very solid. So I'm not going to count this. All right, there we go. I'm just showing you guys. Tapped into it. And now we can expect the push to the upside. So pretty much we had internal liquidity taken. And this was a feather swing actually. Look, yeah, it was nice. And then we had a feather swing, so cool. So yeah, so we had that range formed. We understood the trap. Now we're here. Okay. So now we fulfilled this range. That's done. So after a breaker structure, a new range created. So now we can expect this to take this out as there is a buy stops resting above there. One of the biggest confusion is when or where is my exit? You have to know where to exit. All right. So when does my range end, or where's my, end of the range? Where's my exit? Exits are more important than entry. So you have to know where to exit, because I get questions like, why did it break this high if price is, supposed to hold until it reaches this? Yes, if you have the right leg and the right range, is going to do that. So obviously, if it breaks, then you didn't have the right range and you didn't have the right leg. Simple as that. So you have to know where to exit. Okay, so here, notice we just dropped wick, wick, wick. These wicks were never taken from each other. They hold it strong high, strong high, strong high, strong high till we hit here. Okay, so then let's see another example. I don't know. Yeah, so low, 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 low until it fulfilled this range. So you have to know your exits, know your targets. Okay, it's more important to know your exit than your entry. Your entries are irrelevant if you don't have the proper bias and if you don't have the proper exit. Okay, and pay yourself something. All right. So BOS and range created. So we can anticipate now this to be the trap. If this is this, then there will be T1. And we show it here, and this, let me see. Yeah, now this should not just drop. Okay, because this is the bigger range, which equals, which was this one. So we're gonna target this right there. All right, so what does this mean? That means because we know where our trap is at, we can hedge. We can go long until we fulfill this target. All right, so let's go to the 1 minute. All right, so obviously we didn't get no opportunity, at least not in the 1 minute, maybe in the seconds time frame. We did, but not in the 1 minute. So, but there you go. You see, we fulfill the targets, the trap's taken. Cool. All right, so I want to check my POI, but I don't want it to show, so I'm gonna put that back. So there's a trap. Now let's find the POI. So that's a big unmitigated wick, order block. Have the imbalance right there, which is also a strong high rejection block. So we can expect price to come to here. Now, once it's in here, monitor price. Is it gonna go or is it gonna fail to swing? That's the only questions that we should just have in mind here. Delete this. All right. So that's the trap. That's the POI that we have marked up. So how much is this? 2.5 to this low. So let's say we took a short here. Just a breaker. So it lines up with a breaker, so we can adjust that. Okay. So that would have been a loss. If we took it directly, that would have been a loss. So what's in here? Now, all of this is inside, obviously, inside of this bigger POI. Like, that's something that we're aware of. Okay. But now, this is the first entry that we took. And we got taken out when we took a direct entry. Now, there's a reason why. So now we got to figure out why we got taken out. All right. Because remember, even though price doesn't always take out internal liquidity, it still can. So that would have been my first short 100% right there. All right. But now if we step back a bit and we start thinking logically, right? If this is a support and resistance break and retest, right? Why would we want to short in the same area that break and retest traders are looking for short? That's the liquidity pool, right? So we wouldn't really look for area here, but it met the rules. Okay. It met the rules. I'm not gonna make an excuse. It met the rules, so I'm gonna take it. However, this is still the range from here to here. Okay. And I know that all of this is a POI. So I'm aware of that. I'm aware of all of that. Now I need to know where price gonna come into. So okay, so we see obviously equal highs. That's the internal liquidity. We saw this equal high that we had here. I mean this high point, strong high. These become weak, obviously, after a break of structure. That's the internal liquidity. So once we sweep out this high, it shouldn't break this. It tapped into this, so it should now drop. So let's see what happens. I see entry already in seconds. All right. Push. Yeah, push good. It's a good push. So get a re-entry on this. I do know you broke structure in seconds in here. I think I'm a little bit too far off to go on the seconds. But we did break structure in the seconds here. That's a trap because the reason I know it broke in seconds is because it's quite obvious that wick right there is structure on the lower time frames. We all know that. It's a strong high. Came in, create a strong high. Then we broke again. Price broke. Then we have a fairly swing because we broke above this high point here because this high I got this low. Broke above. All right. Yeah, three candle formation helps you see structure on the lower time frame without going to a lower time frame. Okay. But obviously, if you don't see it's not clear, then go to a lower time frame. All right. But I know that's a structure point because every high and every low is a structure. So broke structure, we could expect a long into here. Can I go to the second time frame? No, we can't. All right, so now we got to go back. All right, guys, sorry about that. We're back. I'm not going to do the video. I'm already in over, 15 minutes. So we're just gonna continue going. All right. At the end of the day, this is for you guys to learn. So, but like I was saying, all right, here in the second time frame, there's a break and there's obviously a POI here. And the second time frame, we can expect a long from the area, take out this high, a strong high here. The close of POI to liquidity is this one here. So, like I was saying, we could expect, so we can expect price break from here, which it currently is. Oh no, I think it was this area. Yeah, it was this area right there. Expect from there, from there, there it is in here. So we could expect a long from here to the upside, look for a short from here to then target the overall target. Right. The good thing is that we're almost at the end of the range before we did that switch to 30 seconds and then we just got pushed back to the future. Okay, so going along this, and we're gonna exit here, and then we're going to short here. target this. All right. Again, seconds time frame break. Seconds time frame break here. All right. This is, what was this? Price broke structure. Retrace BOS again. This would have been T1. T1. Go long, exit. Then go short here. We had another break there. All right, target fulfilled. All right, so far, I hope all of this making sense. It should make sense by now. You know, you guys should already understand everything I'm saying. I mean, it's as simple as this. There's really not much to say. There's nothing extra. There's nothing missing. This is literally everything. It's just training yourself to see it in T1, T2, and treating every time from the same way. So it's simple stuff. Because I get a question, oh, am I missing something? Is there something else that we need? No, this is it, right? The way I trade is just raw PA, price action. That's it. No indicators, no fancy, nothing. This is it. All right. It's just how I trade. There's nothing else missing. Yeah, so now short here, target this, see what happens. There we go. All right. So yeah, you know, all of this was done good. And then here we had the little issue of we couldn't go to a 30 seconds time frame, but you guys understood the overall idea. And I also anticipated this before it happened. All right. So for those I want to say, oh, you saw it. I anticipated before it happened. Okay. I pretty much explained it. So yeah, we fulfilled target. Or actually, no, not yet. Where the target at? Oh, it's down here. Okay, so we fulfilled target of this range, yes, but not the one I was actually waiting for, which is the one down here. So, okay, there we go. So we just fulfilled it already. So just put it. There we go. Target fulfilled. We are now reacting from the imbalance. Notice the liquidity is being built up. And then we can just pay some moves to the upside from here now, right? Yeah, there it is. Because now we're going pro trend. Awesome. Well, guys, that's it for now. Any questions, let me know. But that's it for now. On to the next one.